In this episode of AI, I'm interviewing Stephanie Walter. She's a capital raiser, syndicator, and CEO of Erbe Wealth. After recently retiring and having sold her insurance agency after 16 years of following the principles to build her business, now she focuses on co-syndication. Her goal is to connect her select group of investors, her tribe, with investment opportunities that she's found and vetted and that are extremely desirable. And at the end of the day, she's simply looking to help investors reach their financial goals. She's an expert in tax mitigation and 1031 exchanges, and we're going to talk to her about co-syndication.
Welcome to the Accelerated Investor Podcast with Josh Cantwell. If you're looking to retire early with forever passive income, you're in the right place. This podcast is the go-to destination for real estate investors, both active and passive, and multifamily apartment investors, both new, intermediate, and advanced. Now, sit back, listen, learn, and accelerate your business, your life, and your investing with the Accelerated Investor Podcast.
So Stephanie, listen, welcome to Accelerated Investor. Thanks for jumping on.
Oh, thanks so much for having me.
Yeah, looking forward to this. So listen, I know you've done a lot of co-syndication. You got a lot of financial services experience. That's how I cut my teeth as an entrepreneur, right? My dad owned an employee benefits company, and I almost went to work for my dad. And I decided to go out on my own and start doing my own financial planning. It taught me a lot about raising capital and dealing with investors. So we got a lot of the same background, a lot of things that we can definitely chit chat about with our kind of trajectory of our careers. But I know you just sold your agency, doing a lot of co-syndication. So I'm trying to understand, like, now that you look at 2022, there's a ton of action happening in multifamily and apartments. Help us understand, what are you up to? What are you working on right now? Maybe a deal that you're working on, and what are some of your goals, and what are you forecasting for 2022?
Wow. I am right now, I'm finishing up a raise of $7 million for 160 units in Tallahassee. It's a value add. It's our fourth acquisition in Tallahassee. We absolutely love Tallahassee. The growth there is insane. And the rent growth from 2020 to 2021 there was 18%. And
wow.
Granted, it's not always going to be this way, I'm sure, but the growth in Florida certainly is driving this shortage. I also was contacted by a person in my database that owns a fintech company.
Okay.
And she's launching it. Really, really interesting business model, just really cool stuff. And so we just came to our agreement this morning for me to raise for her, and I'm pretty stoked about that. I've never raised for anything outside of real estate before, so this is kind of exciting for me.
Are you allowed to talk about this fintech thing? Can you peel back the onion a little bit?
Yeah. It's the name of it is Lock Trust. It's a banking mechanism. It's really gonna change the way that people bank. You know, they have like lots of different things, but essentially, you can basically pay with anything. You know, it basically brings all your bank accounts together, all of your credit cards together. Any way that you could possibly pay is put together on their website.
Okay.
And so you can actually do wiring. You can set up escrows. They have actually a way of banking the marijuana in states so that it's legal. And they have a cryptocurrency exchange. So you can be buying and exchanging out of the crypto, and very cool company. They just need a more capital to get them live, which is what they're striving to do. But
how much capital are you looking at raising for that one?
It's actually pretty small. It's like 3 million.
Yeah. Yeah, it's funny. People say that's kind of small. It's 3 million because yeah, I mean, there's a lot of big deals happening out there with 10 and
Mhm.
20 and $50 million raises, even just in multifamily, and then let alone, technology companies that are just going bananas.
Yeah.
Um, are you guys making any projections, or how much are you really looking at the Federal Reserve and the raising of interest rates to kind of cool off the economy? As you look at 2022, how much is that a talking point in your business? For us, it's like, look, the rents keep going up because affordable housing is like non-existent, right? Like people can't buy a house anymore for like less than two, three, 400 grand. So their payments are like $2,000 or more, including all of their impound accounts. So if you can rent out apartments for 1,000 to 1,500, like that becomes all of a sudden very affordable. And so although we know that interest rates will go up, which means cap rates will go up and values will slowly come down or come back from the moon, come back to
Mhm.
normal, the offsetting number is that rents keep going up, right? So how much of that is a talking points inside of your organization?
I mean, it's huge. There's just so much speculation about what's going to happen. And I just try to bring my investors back to, nobody knows the future, but we do such a, a hard look at the markets we go into. And the ones we go into have serious housing shortages that are
Mm.
really predicted by many of the, people that we talk to in these cities, that it'll be years, 5 upwards of 10 years before they'll get caught up. So that's one thing, if you have purchased something with a growing economy, in something that the population is growing and there truly is a housing shortage, it really comes down to supply and demand.
Mhm.
So that's just a great inflation hedge, I think, because they're just going to keep moving there, and there's not going to be enough affordable housing, like you're saying.
Yeah,
So
right.
I think it'll
Are there
be.
any tools, Stephanie, that you're using to evaluate those markets? Is there any specific reports that you point to? Is it CoStar? Are there any places that our audience can go if they're evaluating a new market? Kind of
We
secret
go
sauce to use
to
to
the
identify
federal
them?
government a lot, and we look at employment numbers. We look at we always call the economic development office in the cities that we go to ask about what's projected in the future there.
Mhm.
We also run, just if you pull up, even on Wikipedia, and you pull up a city, it's going to tell you, where the trends are with the census. Is it planning on growing or not? So we use, there's just so much that's available through the states and through the federal government. But
Mhm.
essentially, we're just looking at job growth growing, population growing, and we look at a diversification of an economic base. So we're looking at cities that have lots of things happening there, like technology, health, um, government in some places, and just seeing that what is planning on coming there. I know Waco a few years was considered this type of a market, and they had like SpaceX coming and Caterpillar and all these, a lot of companies from California are moving into Waco because they can buy really large, enormous pieces of land for very cheap.
Mhm.
So it's just really, those are things that, investors can do, or they can, do their due diligence on, us as a team, and see and trust that, that's the type of due diligence we're doing.
Love it. Love it. So your primary model now after selling your insurance agency, like you have your tribe of investors and you're kind of partnering with other sponsors and really making those deals happen and get capital into deals.
Mhm.
Help me understand, how are you able to kick that business off after making the transition out of the insurance agency to kind of select your first partners? How did you arrive at those first JV opportunities and co-syndication plans?
Oh, yeah, that's a great question. Basically, I worked, like with insurance, I've I've done that for 16 years, but I was always an investor in single family and small commercial properties by myself. And then I joined RE Mentor. It's just an educational group. And that's kind of where I got all of my, you really have to learn about commercial real estate.
Sure.
It essentially gives you a master's in commercial real estate syndication, which you have to start at the bottom and learn the whole way up. So once I learned about the concept of syndication, which was, that's 5 years ago. I just threw myself into it because I loved it so much. Did my first syndication by myself, decided I never, ever wanted to do it by myself again, ever, ever. And just got connected with my partner, one of my, my first partner essentially. And we've since 2019 have put out 9 deals. So I haven't really looked outside of him to raise money yet. I definitely is something I'm considering in the future. But
Is he doing the raise,
I just until I got sorry.
Is he actually doing the raise for deals, or is he the operator that you're plunking money down with?
He's the operator. So I raise the capital, he finds the deals, and that's worked, up to this point. But we're really invested very heavily in Florida, which I think is fantastic. It was great. But, I get approached by other teams that are looking for that help with the capital raise. And now I'm more established. So I have, I feel more confident going out and raising for other people.
Gotcha. That's fantastic that you really kind of hunkered down. We've done the same thing, with our 4,000 units. We've actually got 3 ownership groups. We've got about 1,000 units or so that we've personally bought in my backyard in Cleveland. They're heavy value add, meaning, deep unit turns. And we own or operate those with our property management companies. We actually own the construction company. And then the other 3,000 units are spread out between a couple different, 2 different JV partnerships and similar circumstances and structure the way that you're talking about. That's worked well for us to be able to do our own deals and then have a couple of core partnerships. If you were to look at another partner, and I think this is really a question for you, but I'm trying to set this up for our audience, right? Because a lot of our audience may feel like they can raise a lot of money, but they maybe haven't done that yet, or they haven't selected a partner yet. So what are some of the things that you looked at going into that first syndication? And then you've done 9 of them. If you were to select another partner, what are some of the mechanics, logistics? What are some of the questions, the boxes that you have to check to make that comfortable, to make that partnership feel like it's going to go?
It's good. Yeah, that's a great question. I think definitely it's important to see their track record, to learn about them personally and professionally, what they've done, kind of what their philosophy is on, what they're looking to invest in, and if that really meets what I'm looking to invest in and know about. And if honestly their underwriting is hugely important for us. Like, I remember starting in this industry and being like, oh, we can make this work. We can make this work, so desperate to get into your first deal. But when now we've got, 9 deals under our belt, you can see things that pop up, and why that conservative underwriting is so important, because my investors are really they're like my clients, and I want them to be happy with the end results. And getting into something where someone overpromises and underdelivers would be pretty devastating.
Yeah. I think we're all a little spoiled. Like, it's been pretty hard to underdeliver lately.
Yeah. That's it.
The question really becomes, as we see some more volatility, whether it's energy in Ukraine, whether it's war with Russia, whether it's rising interest rates and rising federal funds rates, which we know is going to happen to temper inflation. But at the same time, knowing that rents are probably going to continue to go up because there's this huge shortage of housing supply, this massive foreclosure crisis that everybody thought was going to happen when COVID hit has never materialized, and it's not going to materialize, partially because host values keep going up. So there's no reason to foreclose if you can sell your home or refinance out of it. So those are all different moving parts, right, that we've faced over the last year or two that we're going to face. We're definitely going to face more challenging. So I think if you look at an operator now, Stephanie, from your experience, last 5 years and 9 syndications, what kind of fail safes, I guess is the word, what kind of balance sheet, what kind of extra horsepower is somebody going to have to successfully negotiate and navigate these next coming years? Because I would submit it's not going to be as easy as we've had it the last 5 years. Right. It's been fairly easy for us. Even when a deal didn't pencil out or work out exactly as planned, it's still going to be worth more because cap rates keep coming down. It's probably not going to happen over the next 2 years.
Right. Exactly. So, I mean, for us anyways, my partner, he only buys from pocket listings. So,
okay.
He was a commercial broker for 35 years in Florida. So he has like a lot of established relationships. And so the way he buys is he makes money on the buy, actually. Like one that we bought in September of this last year, it was brand new construction. It was a developer that just wanted to sell it and get out. But what happened is our contract said that we wouldn't purchase it until we had the certificates of occupancy. Well, who knew, but that got delayed. So this developer probably at the end of the day wasn't thrilled, because by the time it came time for us to close, property itself had probably gone up another $1 million. And so that's great for us and for our investors, but not great for him. But yeah, you have to be creative and find a property that you're getting a good deal on.
Yeah, absolutely. And not be in the bidding process or try to avoid it as much as possible.
Yes. Go direct.
An offer we made this past Monday for $15 million. And we know we bought a lot of pocket listings last year in the last 5 years. And that one is on the market and going through the process. And it's going to get bid up. I know it is. And want to just see where we tap out. And if we tap out and we're the high bidder, then we're going to win it. If we tap out early, then we're not. But those pocket listings are huge. In order to get those, you have to just have enormous amount of capital to be able to execute. You have to be able to talk a great game and be able to convince the broker that you can close. Probably put up non-refundable earnest money up front, hard earnest money, so they know that they can take it off the market and be confident that you're going to close. So I love this strategy where your partner just says, I'm going to plant my flag in the ground and say, I'm not going to buy it unless it's pocket. Right. Yeah. And then go to brokers and say, we don't buy anything unless it's a pocket. I think I'm going to steal that. That's a great idea. We don't quite say that, but we prefer those. So we might as well just say it and tell the brokers we only buy pockets.
That's it.
I love it. That's a great strategy. Thanks for sharing that.
Sure.
So Stephanie, help me understand the structure, right? So when you do buy something in Tallahassee or in Florida, what kind of things are you looking for? And if somebody is an investor with you, like, is it a traditional 70-30 LP-GP equity split? And what kind of hold times? Help us understand a little bit more about the structure.
Yeah, our structures are usually 65-35 actually. And we're, depending on what they invest, they'll get a 7 or 8% preferred return. But what our goal has been for our properties is their value add. Like I said, this is our 4th deal in Tallahassee. So we have our everything in place, the construction companies. So we do the micro renovations. We found this one again off market. So it was being run actually by a team in Canada, that did a piss poor job managing it. And so there's just an enormous value to just straightening up the organization, getting the rents up to market, because like I said, Tallahassee is increasing 18% a year. And so they're not where they need to be for that. So we've done 9 deals, and every deal that we've done has returned our investors over 20% annualized return a year. Our goal is always, we tell the people that we want to hold between 3 and 5 years, and our goal is to double the money in that period of time.
Oh, I love it.
Yeah.
That's great. That's a great box to operate in. And a pitch I think that investors can really buy into. Obviously, based on your track record, they have bought into it at a massive level. That's fantastic. So Stephanie, let's take a step back then to your transition again 5 years ago. When I introduced you, we talked a little bit about your philosophy of having to teach people to unlearn what they've learned. And a lot of people, because the education system is so outdated, it's so globally outdated, and it teaches people to become employees, not owners, not entrepreneurs, not investors, but the whole system from grade school to high school to college and beyond is all about creating employees and employee mentality. And one of the things I loved about what I read in your bio and getting to know you is your philosophy of how you built a business and how you're teaching some of these investors and people around your circles to unlearn what they've learned. What do you mean by that? And how do you teach them to do that?
Well, I mean, I was actually I've always been an entrepreneur. My dad, that's who my company is named after, is the reason why. But I've always had an entrepreneurial mindset, but like my investment mindset was, even though I had my Series 6 when I was an insurance agent, I never understood, really, even with all the training you get and everything, it's so like, we don't know. Nobody really knows. And so because of that, I was like, this is not where I want to put my money. I want to put it like, I didn't have a great deal of education, so I just invested in single family homes. But what I realized, and I was just going to buy them and hold them for 30 years and then retire that way. So then when I started raising money, I met wealthy people, and I noticed that they were, and of course I've done a lot of reading and stuff like that. And what I've noticed is that cash flow is everything. Cash flow is everything. And I was like, very concerned with my net worth, and look at my spreadsheet, look at how much money I have on paper here, but I have a couple $100 coming in cash flow. So to see the wealthy people, they use their money for cash flow primarily and solely, and if they're very savvy, they're using the same money in different places at the same time. But so I changed it. It took a couple of years, but in 2019, I decided to start selling my properties one by one. I did that. I've invested in every syndication I've done personally, and that cash flow has allowed me to sell my agency and retire. So exactly what you're saying is that these people that they don't want to, but they've had no example of how to do it any differently. And so to have that, I feel like it, and this isn't my terminology, but they have the golden handcuffs, they have this 401k. And so then they're like stuck in this business until they're ready to retire, not knowing that if they could transition some of that money into cash flowing assets, that they're not handcuffed to their job, and they would have freedom to leave and do something else, or maybe continue working in that job, but at least have the freedom. And so I try to get that message out a lot. It's very new to a lot of people. And I honestly, the crowdfunding space is pretty new. And since 2012 is really when we, as syndicators, could start, talking to people who we weren't having a prior relationship with. I could talk to you on a podcast and reach a lot of people, but it is still a pretty new space. But that type of a syndicated investing has been around forever. And I always tell people it's largely been used by insurance companies, institutional funding like pension funds, and the wealthy. And the reason that is because they make money in a pretty great returns in a pretty low risk asset class.
Are you ready to automate and explode your real estate investing? We're searching for extremely motivated individuals who are sick and tired of wasting time and want to finally see real results from their real estate investing business. We're searching for investors looking to get to the next level and become a bigger, better version of themselves while being a more successful real estate investing entrepreneur. Apply for mentoring and coaching at joshcantwellcoaching.com/podcast. That's joshcantwellcoaching.com/podcast. What is the primary method for you, or what would you tell someone if they were looking to be a co-syndicator like you are, or looking to partner with somebody, and instead of being in the GP and be on the operations side or the CapEx side or the property management side, but be in the GP and be more on the cap raise investor side? Let's say somebody has more of a passion for the same thing that you're doing. What are some of the things that it takes to be successful to do that? Is it creating a funnel? Is it marketing? Do you just have to know financial terminology? Like what are some of the maybe 3 or 4 things that you've done successfully that you think it takes to be successful doing what you're doing?
I think there needs to be a lot more training in this space, because I came up with Ari Mentor and I love them dearly, but they always said, find the deal, the money will come.
Yeah.
And there's nothing that's further.
I know Dave well. I know he says that.
And there's nothing that's further from the truth. So I've learned a lot of things the hard way, but I think that I'm willing to throw myself out there. I remember I was brought out to a group of men to talk to sell my first deal. And wow, that was trial by fire. But the thing is you become more and more comfortable with it. You become more and more comfortable with the terminology and kind of what people are wanting to hear. But really just educating people goes so far, because there is so much money out there. I know that people are like, oh, it's so hard to raise money and stuff like that. And I know that I thought that too, but there are a lot of people that have a lot of money out there. They have them in their 401ks, and you start talking to people about having cash, passive income and no tax benefits. It's a wonderful investment. I couldn't talk more about someone getting involved in the capital raising side, because what I love about it so much is that, before I was looking frantically, like, for a deal, I'm going to find this deal, talking to all those brokers that I hated and, just didn't like it. But this way, people like this woman in this fintech company, or my partner brings me a deal and says, oh, I negotiated it. These numbers are kind of amazing. What do you think? It's certainly better and nicer to be brought in that way. After someone has gone through hundreds of deals and brings you the one they have under contract and they're ready to go with it. It's just, you ensure yourself you're going to get involved in the best deals that way.
Right.
That's just my philosophy.
I love it. I do think that if you find the deal, money will follow, with a small asterisk. I think talking with investors about a previous deal, right? Mm-hmm. This is a deal. This is the actual structure. This is the actual return, the pref return, the amount of equity, the refi proceeds, the sale, even a hypothetical deal, and warming up that audience, right? Let's say it's a podcast attendee who then reaches out on a DM or opts into a website. You can't just then find a deal and throw it to them and say, are you interested? You can do that using a 506C. You could do that general solicitation, but generally the relationship is really, really meaningful. So in order to get ahead of it, the one previous step is jump on the phone with that person, get to know who they are, spend a little time with them on Zoom, show them some previous deals and say, look, if I found something like this, is this something that you would be interested in? Or if I found something like this, do you know anybody who would be interested in a deal like this? And they'll typically say, well, hey, what about me? Yeah, I'm interested. So you're not even presenting the opportunity to invest. I love to tell people, like, this is a past deal. You can't invest in this one. Like, I couldn't take your money if I wanted to. Okay. It's a past deal. It's already closed. But if I found something like this, do you know anybody else that might be interested in something like this? And they're like, well, hey man, what about me? They've just pre-sold themselves into your next syndication.
Yep.
And if you just bring them another deal that looks like the one you just showed them, they already have convinced themselves psychologically that they want to get in, right? So now it's just a matter of making sure the future deal looks a lot like the one you showed them that was a past deal or a hypothetical deal. And they're like, yeah, that makes a lot of sense. Then there's no like begging for money. There's no sense of urgency on that first interaction. And now you've taken and moved all the leverage in your direction, because now when you have a new deal, and let's say you're raising $4 million, you're going to do 40 spots at 100,000 each, and you've got a whole bunch of investors warmed up. Now you have this sense of scarcity working in your favor.
Correct.
Hey, I've got 150 investors, or I've got 80 investors. I've only got spots for 40 of you. First person to go make a reservation gets in. Now all of the leverage is on your side. So I imagine, Stephanie, you probably use a lot of those same psychological triggers the way you do it.
Absolutely. Absolutely. There is a bit of psychology in it. It's not like to be trickery or anything to people, but it is, it is the truth that there is a scarcity when you get in, and you can really understand people's reasons for wanting the money, because some people want cash flow, some people want tax benefits, some people want the appreciation. To really understand what they're wanting, and you can have that conversation and really connect with them, you've got them. As soon as there's a deal, they're on board. So yeah, that's a great way.
It's kind of funny, like, it's tough with this audience, right? And my audience knows me pretty well. So some of them are limited partners, and that's all they want to do. So it's probably weird for them to hear me teach them the psychology about how we get them to invest.
Yeah.
So probably thinking like, oh, that totally worked on me. Right. So I'm not trying to be disrespectful. I'm just trying to be as open and transparent as possible with my group. And some of those people that are new syndicators or owner operators looking to raise more money, it gives them some real tools on how to do the raise. And then other people who are limited partners, I hope they're not taking offense to it. They're typically not. They're like, kind of like, wow, that's exactly what Josh did to me, and it freaking worked.
He's happy that they're happy they're in the deal.
And that's all that matters, right? As long as you're transparent, everyone's happy, you're above board, you're doing things the right way. And I laugh with my group about, I've got one of my investors' name is Matt. I'm like, Matt, that totally worked on you. He's like, I know. It worked. No, and he's a good friend of mine now, so it's a good time. Stephanie, let me just ask you about advice, right? So if we were to go back 5 years ago and you were starting over, after having 5 years of experience and 9 syndications under your belt and a big portfolio in Florida, is there anything you do different? Is there anything you'd go back and tell yourself 5 years ago, like, do it this way or do it differently so you could go bigger, faster, stronger?
Yeah.
What kind of advice would you kick back to our audience or back to your younger former self?
I mean, for sure, in that 5-year period, I think, you'd have bypassed all the things that you learned from, which were mistakes. Don't buy lists of investors. Don't, there's a lot of like the content. That was probably the biggest thing for me. That was like, whoa, was like, you need content. You need a lot of content. And to be honest, I still kind of struggle with getting enough content out there. I'm going to be starting a podcast myself in the next month. And that's a big reason why, is that, you kind of learn where your investors are starting to come from, and then you just want to recreate that investor again and again. And so I've gotten more laser focused on where I'm willing to put my time and my money.
Yeah. It's amazing really when you put out good, valuable information, right? Good, valuable content. And a lot of the content that's out there has been mentioned or said by many different people, but what matters is what do you believe? What do we believe? Like, what's your spin on it? Like, what's your take on it? So a lot of guys doing syndication. So what's Stephanie's take versus Josh's take? And I think this is the advice back to our audience is you build your portfolio, people will buy into you. The information doesn't have to be brand new. It's not like you have to invent something. Like apartment syndication's been around for a long time. Stephanie and I didn't reinvent apartment syndications, but it's just how we do it. And then people will buy into your message and to you. That's really putting your personal spin on it. Is my advice is just be okay with being you and make sure you have some energy, make sure you're not boring, but be yourself and people will buy into that. Right. And they'll be like, hey, I know there's 2,700 other syndicators out there, but I like you, Stephanie. I like you, Josh. I want to do it with you. Right. That's really what this comes down to at the end of the day. So Stephanie, let's wrap up here and finish with our final 5. Couple quick questions. I'm always curious to hear these from people operating all over the country. So Stephanie, we talked a lot about syndication. So what is your favorite way to find money and get new investors kind of into your funnel or into your conversations?
People that have heard me. So as a guest on a podcast, that is my number one thing I tell people, is that because they hear you and it's exactly what you're saying. I can't please everyone out there. You can't please everyone out there. We just want to please our favorite investors and create them again and again. And the only way you can do that is by being yourself. And I believe like audio and having conversations is a way that a lot of people can get that information from you. So when people call me after hearing me on a podcast, they're ready to invest. There really isn't anything to talk about. Mm-hmm. And so if you can recreate that where people get to know authentically you and like you, then they're usually ready to invest.
I love it. I would ask you your favorite way to find deals, but I think I already know the answer is your partner and pocket listings only.
Yes. And I love that. And I like to be out of the process altogether because I don't like any of that.
Yeah. Well, you got to have your specialty, right? Yeah. The good thing about apartments and commercials, the pie is big enough where everybody can have a very specific role. Mm-hmm. And you'll get plenty at the end. You're splitting up such a bigger pie that everybody can still make a lot of money, even if they only own 5 or 10 or 35 or 50% of a deal. It's not like resi. So that's great. Stephanie, who do you think, you mentioned your dad, your company's named after your dad. Has he been the one that's had the biggest impact on your financial life and your business career, or who do you think?
I mean, he passed away 16 years ago, so he hasn't seen any of this, which kills me. But yes, having the thoughts in my head of being an entrepreneur and doing it yourself and all that stuff, figuring it out, just keep working through it. You'll figure it out. That's been huge. But I've honestly had good, other good mentors as well. And just like philosophy I've gained from books like the Killing Sacred Cows. I love that book. And I actually talked to an investor the other day that she worked with Ted Turner, and that is a book he told her to read. And I was like, cool. I'm right on. We're like this with Ted Turner. No.
Got it. Love it. I was going to ask you some of the advice that you've gotten or favorite books. So there you go. I've heard of that book before. I have not read it yet. So Killing Sacred Cows. Yep. I'm going to jump on that. Stephanie, if you are kind of deep in your business as an entrepreneur, we both know that you can get into the muck very quickly, just kind of in the dirt. It's very important to get away from the business and think, right? Especially in these kind of weird economic times that we're in. Mm-hmm. What do you do and how do you get away from the day-to-day in order to think about the future and think about the direction that your entrepreneurial journey is going? Is there a place you go to think, or how do you get away from it all to make sure that you stand on track?
That is something honestly I struggle with, and because I don't know, I love to work. I found this out because I retired from my insurance agency. I sold it in July of last year, and I was like, great, I'm going to have all this free time. I can do all this stuff. And yet I'm here at 8 o'clock in the morning. I love to, have that quiet time because I don't work out of my house. I have an office, and I really like to read, what's going on in the world, what's also what successful people are doing. I'm always interested in that stuff because I find that things definitely align. But yeah, to get out and away, last year I took my first vacation that was 2 weeks since 2006, and with my husband to Alaska. So my goal is to do that once a year. But yeah, I do need to work on that. It's something I'm working on, but I love what I do, so it doesn't feel like work.
Gotcha. Love it. Last question. What was your favorite part about your trip to Alaska?
Seeing my husband catch a 52-pound halibut, and
wow,
just the joy in his face. But the whole trip was wonderful. But yeah, he had never caught a fish that big, and he was giddy.
Yeah, God, it's right. The happiness of other people often is what makes us most happy.
Yeah.
Certainly true for a lot of entrepreneurs that I know. Well, listen, guys, Stephanie Walter has been our guest today. You can find her business at erbewealth.com. So Stephanie, tell us about that. Tell us what people will find when they go there, and how can people connect with you after this interview is over?
Yeah, just going to my website's the best way. It's www.erbewealth.com. And I am working on changing this, so hopefully in 5 weeks there'll be a great deal of new information on there. But yeah, I'm in a content creation space right now, so I'm just trying to create just a great deal of teaching investors, teaching syndicators how to raise money, teaching about deals that we've had. So yeah, it's a great space to be.
Love it. Stephanie, listen, I had a blast learning more about you and your syndication style, your investing style today. Thank you so much for joining me on Accelerated Investor.
Thank you for having me. It was awesome.
So guys, listen, I hope you enjoyed that episode. Some of my takeaways in interviewing Stephanie. Number one was, again, the pocket only opportunity. She only invests with this one partner who only buys properties that are pocket listings. It's all about convincing the broker that you can close. Big takeaway. I love that one. Love the book recommendation, right? About the sacred cows. I'm definitely going to download that in Audible and listen to that. I'm just burning through books lately. I love that. And also Stephanie teaching people how to unlearn the traditional investing styles of, throw the money in your 401k, slave and save. Unbelievable. And I think my other big takeaway from interviewing Stephanie that we didn't even talk about, but is, look, here's a woman who's successful, builds an insurance agency, sells it for a big profit, and doesn't, and could retire and doesn't. And I think that's actually very normal. I think that's very, very truthful. It's very normal for people who have had success, like I have, like other guests that we have on the show have had, where, look, it's all continue to be about fulfillment. It's all going to continue to be about contribution, growth, right? And so this fake narrative of, I'm going to build a business, I'm going to sell it, I'm going to be worth millions or billions of dollars, and I'm going to retire to an island, I'm going to buy an island in the Caribbean. That's total bullshit. Nobody does that. And even if they do, it gets boring real quick. And they come back because we're human and want to contribute. So if you just tell yourself now, like, look, life is not about slave and save, retire and stop. Life is about fulfillment. It's about the journey. It's about contribution. It's about feeling complete and happy. And you may build a big portfolio, sell it, and then what's next? Okay, what's next? Most of the, gray hairs, I got a lot of gray hair for 45-year-old, but a lot of the gray hairs that I know, they're not slowing down. They're not stopping. They want to continue to feel fulfilled and contribute. So just make that part of your narrative for your life. Okay. All right. Listen, if you want more information as well about me, take a look at our portfolio, invest with us passively, check out our podcast, go to freelandventures.com. Don't forget to leave us a review before you leave this interview. We'll see you next time. Take care.
You were just listening to the Accelerated Investor Podcast with Josh Cantwell. If you enjoyed this episode and learned something new, help us build the AI community by leaving a review and 5-star rating on our iTunes podcast channel. Also, don't forget to subscribe so you never miss another episode. To see passive investing opportunities, visit freelandventures.com/passive. To start your journey toward the lifestyle you've always dreamed of with multifamily apartments, apply for one-on-one coaching with Josh at www.joshcantwellcoaching.com.